Hello everyone. Gold price reached another all-time high right after the Labor Day today. As of today, after the market close, the ounce of gold futures, gold COMEX, closed at 3,596 ounce per dollar. It crossed that level of $3,500 an ounce earlier today. So in terms of returns, gold has actually surpassed most of the other asset classes. It has appreciated for about 42.38% over 1 year. Year to date, it has gone up 36.27%, and since last 6 months, it's been up about 6.77%. And if you want to compare the other stock market indexes, the performance of gold has been spectacular. Say in this particular graph, you could see that for last 1 year, gold has appreciated about 43%. When you compare against the other indices, Dow Jones Industrial Average has appreciated only 11%. S&P 500 index has appreciated 16%, and the Nasdaq index has appreciated 24% in these three different colors. Yellow is the Nasdaq index. So whereas gold has gone up way over the other indices to 43%. So why is gold price has been appreciating so much? I also had made another video a couple of months ago. You could please refer to it. And since that time, gold prices have gone up even significantly higher. Actually, investors piled back into gold after a round of unsettling headlines last Friday that federal judge in an appeal court struck down Donald Trump's reciprocal tariffs. A majority of the court said that the president exceeded the authority under the International Emergency Economic Power Act, and the court allowed tariff to remain in place while the decision is to be appealed to the Supreme Court. And Trump is going to appeal to Supreme Court against this judgment by this appeal court that has been actually been struck down. So with this uncertainty, it could be such that the possibility that all that tariff earning that government has earned due to tariff, if it's remain in impact, according to the judge, potentially the government will have to pay the money back, whatever they have earned from tariff. If that is the case, it will create inflation in terms of paying the national debts, everything. So the bond market, 30-year bond yield actually almost crossing 5% today. So the yield the US Treasury long-term bonds, the yields are spiking up and the prices are dropping. The relationship between the bond price and the yield, they go inversely proportional, and the gold prices basically like surging because of uncertainty and potential inflationary pressure if the tariff amount has to be paid back to the government has to pay it back. So now let's go over, along with this, the gold price itself, all the other stocks or the ETF related to gold, today they have spiked as well. Here, like the gold spider GLD, today it closed at $325 close. It's up about 2.36%. Similarly, iShare Gold Trust IAU has gone up about 2.38%. Then VanEck Gold Miners ZDX, it has gone up about 2.5%. The Alamos gold mining, it has gone up 5% today. So potentially, and also the volume actually has been pretty higher actually for this spider, for example. The number of the volume traded today is 21.2 million, which is well above the average. That means that the bull run for this gold might continue for some period of time. It has been bullish for quite some time, and the volume is also up. So, and people basically are afraid about inflation if this tariff rules by stuck down, and it might get more inflationary. So in this particular case, you might take some in your portfolio, perhaps take some of these gold index or the gold miners might make sense if this bull run continues for some period of time, because and also there has been a lot of pressure regarding the US dollar. The people are saying that the dollar might weaken because of the friction between the BRIC countries, where basically Shanghai Corporation meetings, where China, Russia, India, they all are combining together and create basically their own mechanism to do trade settlement through their own currencies instead of doing everything by dollar. And if the dollar basically weakens, the price of gold basically in terms of dollars is going to be more expensive. The dollars are going to be weaker, so same amount of gold if you have to buy, you have to pay more dollars. So this is what's basically going on in terms of this gold market. I hope you found this information interesting and valuable. If you liked it, and if you liked it, please hit this like button, and I would appreciate if you would subscribe my channel so that I can continue to make some more videos. Thank you very much, and have a nice day.